Alrighty then. Let's see. It is what day? Tuesday, January 10th. I'm gonna be covering a lot of crap today. So where to start? Where to start? We'll give it a few minutes, see if anybody gets in to the live chat. While I'm doing that, let me set up one chart. We're going to cover, well, we're going to send out our test signals, and then we're going to talk a little bit about binary options. We're going to talk about how I don't use a mouse. You name it. Experts, sender. If I could type right, Brian Mac. Shift. Crap. Let me check something real quick. And we'll get going here in a minute. Son of a bitch. Come on. Okay, sorry. I'm talking to myself. There we go. We're clear there. Alright, so we're going to start off first with something easy. I'm just going to send out a couple pending orders. What is this? GBP USD. Trading. Let's do a buy stop. And trading, we'll do a sell limit. Alright, so if you're in the signals group, there will be a buy stop and a sell stop. These are not actual trades. They're just to make sure you can get the signal. Some of you didn't participate in the demo, which is fine. You didn't have to. Those are there. They will be on, what, GBP USD. Don't worry, I won't be trading that one live. And I'm going to remove them. If you go to account history now and you click on time, you will see them at the top. Just click so it brings the newest date up. You'll see a buy stop and a sell stop on GBP. The prices that you're looking for are somewhere around it should be 1 point on the sell limit. It's 1.23585. On the buy stop, it's 1.23993. You should match that exactly, do believe. So that's that for the signal test. Just check your account history tab and you should see it. You don't have to have that pair open. Again, all you have to have is the blue screen open. You just need this open to get the trades. So that's all you need running on your MT4, and it is highly advised that is all you're running, as it will keep your MT4 nice and fast. Coffee, yes, good shit. Alright, so next up. Okay, so buy request, what else do we have? Okay, so we're going to start off, this is going to be binary/forex related. Let me get on M5. Okay, so first questions we had, what time frame do I trade binaries on? M5. What does that mean? I use a 5-minute expiry. M5 is the 5-minute chart up here, M5. If you need a little bit of room just so you can see, these things are draggable and droppable, so you can move them around. These little dotted lines here, you can line all your crap up at the top to make a little bit more room on the chart. I am going to start off with absolutely nothing on it except for candlesticks and the inlines, but we can ignore that. It's just part of my blank template. And template. Now, why am I starting off with a blank chart? Well, for one, I don't want you confused, and two, I want you to be able to look at a chart and say, you know what, that looks like I could trade it for the day. This is for Forex or for binary options. With the indicators on there, it can maybe clutter it up, but it's a good way to start. Am I in the right order? Let me see. 2, 3, 4. I'll go over the order thing I just talked about too. If you notice, here's my mouse. I'm flipping through charts without using the mouse. I guess I'm lazy. I hate the mouse. I'm gonna put a link in there and show you how to use that also. It's really freaking simple. It's all set up and ready to go. Unless you have some weird, strange keyboard without a tilde key, which is the one to the left of the one. Okay, so you logged in the morning. It's time to trade. What's the first thing we need to do? Well, the first thing we need to do is jump on over to Forex Factory, and it's just forexfactory.com. Is there any news today that you need to be aware of so you can avoid trading on? Medium impact news at 7:30. Building permits CAD. So U.S. CAD not touching. I'll probably watch out, but it's not too big of a deal. We're already past it anyway. We have Jolt's job opening at 9, but we have no high impact, no red. What we're looking for is this. We do not want to trade around this. So 10-15 minutes before, we do not trade around news. Reason being, if you're in the news course, you know shit goes crazy around news. Spreads increase. The spreads increasing is a big thing, but mainly the price is no longer going to follow its pattern, I guess you could say. So if we are in an upward trend before news, it could start all of a sudden just acting weird. Okay, so bottom line, don't trade before news. I highly recommend 15 minutes before, 10-15 minutes after. Reason being is what you will see a lot of times is news will kick in. Let's say, if we can find anything, let's say this was news. What will happen is we see a correction. So news moves up, and then yay, the people in the news group get their pips, but then what it'll sometimes do, and it'll go exactly down to where it started. So this was the candle where news was, price spikes up, and then it comes back down. 10-15 minutes before, 10-15 minutes after, we don't want to trade because they might just be pushing price back down to where it was before news. We saw that with NFP. What did it do? It bounced up 30 pips, then it dropped 60 pips, so we had a complete 60 pip move. So it dropped, and then immediately within 8 minutes, it was back where price originally was before news hit. So we do not trade around news. I think that sums that up enough there. Second thing we want to look at, and I'm already missing my mind. Let me get coffee, that'll help. Okay, so if we are using Trading Axis, we're looking for a flattish market, looking for ranges. Like, let's see if we got anything. This might be okay. It's a slightly downward trend. We can deal with that. This one's more of an upwards trend. It would be harder, but we might be able to deal with it on these pullbacks down here. It'll take a look at what the chart is. But we need to be aware of what's on the chart. You need to be able to look at the chart and say, hey, we're in an upwards trend, downwards trend, we're ranging. Ranging just means, think of a pipe, and price bounces up, bounces down, bounces up, bounces down. That's ranging. Anything else is trending to some degree. Or we can have what's called consolidation. Let's see if we can find some of that. Let's go to the 1 minute. We might be able to see it that way. I gotta turn this off. Sorry, I've had a lot of coffee today. I woke up late. Well, I didn't wake up late. I woke up on time, but then went and laid with my daughter, and we passed out again. Okay, so this is a 20 pip range. Here we go. Here's a little bit of consolidation, and this is also what we want to avoid trading. Okay, so one of the biggest things, if you see this on the chart, you don't trade. Perfect example right here. So if I'm looking at the chart and I come out, now there's going to be some days that the market just isn't doing shit. If you come out and you see this right here, and you try and trade this, you're goddamn insane. These candles have no structure. They can give you no information about what's going on in the market. They tell you absolutely nothing. And let's say for some god-awful reason you decided to, on this candle here, take a buy, saying the price is going to close higher than this, you're going to get screwed. We're going to talk about spread next. We want to see decent-sized candles. See, we have decent-sized candles here, so a movement is a movement, so you have a chance that if you get it right, you're going to win. If you're trading on those tiny-ass little candles, you're going to get your ass handed to you. And I mean just handed to you. Okay, so the next thing you also want to be aware of is, and this kind of falls back to news trading, but it's also like GBP, if there's a world economic event going on, news trading, things like that. Another reason we need to be careful, and brokers will take advantage of this, is, let me see if I can find one that's a little bit Euro NZD 2.8, 2.3. Looks like 2.8 is going to be the best we can get. So file, new chart. Euro NZD. Okay, so I'm just going to grid it. And we're going to talk a little bit about where binary option brokers get their price from, and also why the spread is important for your Forex trading. Now, if, like, GBP's spread's been it's variable. It's been going up and down. It's calmed down a little bit because there hasn't been a lot of bullshit about Brexit lately. But importantly enough, if you're trading Forex, if you're on the longer term, taking higher time frames like 1 hour, 2 hour, 1 hour, 30-minute, even a 15-minute, the spread isn't that important, but you do need to be aware of it still. For binary options, you definitely need to be aware of it because binary options uses bid plus ask. They put the two numbers together and then they divide it in half, and that's the price that they're going to give you. Now, if the spread is, say, 10 pips, and let's say price is, on your chart, let's say price is at 1 and you have a 10 pip spread, that means they could give you a price anywhere from 1 to 10. This is simplifying things very much, but just so you understand. Okay, so I'm going to put show ask line on there. And can I zoom in one more time? Give me some big fat ass candles. Good, good, good. Okay, so as we see here, this little white line down here and the red line. If I hit buy right now, I closed the signals. Good. If I hit buy, watch what happens. See, my buy price is at the red line. It is not where price actually is. That's the spread. Let me close that so it's not there. Okay, so why is the spread important? One, if the spread's way too high, let's say we had a 10 pip spread, that could put our buy order up here. So we want to always be aware of the spread. I have it included on almost every setup that I give people. The spread is shown. Typically what we're looking for is a spread no higher than 2 pips. Let's see, Damien, if you're watching, I'm not going to be trading GBP USD, so don't worry about it. I'll send another in a few. Okay, anyway, let's get back to spread. So for scalping, the spread's good and bad. Well, not good and bad. If you're in the signals group, it's good because I'm running a 2 pip spread on most pairs, 1.4 to up 2 pips. And if you're on Pepperstone, if I take a 5 pip trade profit, you're going to get 6 to 7 pips in profit. So the spread for y'all is going to work out. For me, not so much. Now, for binary options, why is the spread important? So this is bid and ask line, right? Bid is bottom, ask is top. This is what they're asking for and they're willing to give. Bid is where price is, ask is what they're willing to give you for it. For binary options, and let's see if we can make this simple. Let's get rid of the ask line and properties. Let's make the other line disappear. I'm going to put some imaginary lines up there so we can talk about this. Grid none. That should kill it. Okay, so now you can't see the lines. I'm going to put some imaginary lines up there for you. So we're going to call this one, this is where price currently is. We'll make it turquoise, spring green, whatever. I'm going to make it a little bit bigger so you can see it on there. Okay, so we're going to pretend this is the current price. And this is the spread. So if we hit buy, it would give us an entry up here. We've already covered that for Forex and scalping, so we know about that. Now, with binary options, why is this important? Why do you want to know about it? And why, if the spread is large, do you want to avoid trading? So like bank holidays, why I say don't trade on them, because typically the spread's going to be higher. If you would notice, well, probably, I don't know if you noticed or not, but New Year's Day, the spread was 3 times. I was getting a 6 pip spread on Euro USD, which I'm normally 1.4 to 2 pips. I was getting a 6 pip spread. So let's say, and let's see how we can work this. Okay, so let me move the lines real quick. Move this up here, and we're going to put it down here. I'm going to say... Okay, so we're going to be looking at this candle. I'll put a vertical line through it so you understand which candle. This white candle is what we're going to be looking at. And we're going to make the spread this big. And this is how binary brokers will play with you. So it's important that on the, like TA, it has BO price. You look at that price, and that price should be about what your broker is. And I'm going to cover that in a minute. But first, I'm trying to keep things simple so that y'all can understand. So let's see right here, we're going to take... On the candle close, we're going to take a call or a buy. We're going to say that this candle is going to close higher. Right? But we have this spread. Now, I'm going to draw one more line, and this is going to be the supposed binary option price that they should be giving you. And I'll explain where we're getting this from once I get it on there. And we'll make it a funky yellow. I'm going to make it bigger, so make it a big fat ass line. Okay, so this is your binary options price. It is bid plus ask, and then they divide it in half. So it should fall right in the middle of the spread. Now, if our spread's tiny, I'm going to move things around a little bit. So if our spread's tiny, this is where the binary option price will fall in. So right in the middle, no big deal. So here we took a buy, and it moved up. Yay, we won. I'm going to show you an extreme case of how a binary option broker can fuck you, and I'm saying it that way because that's about all it is. They can fuck you. Most brokers aren't going to do this. Like Core Liquidity Markets and Markets World are the two that I will stand by and say they don't play games. Too bad. But during news, when people say, oh, I'm going to trade news, yeah, they can fuck you there because it's a little bit out of their control. Trading on bank holidays. I will not trade on a bank holiday. World economic events. When Brexit was being voted on, when Trump was being voted on, we avoid those days because spread's going to be high. So normal spread right here. We took our buy at the close of the candle. It moved up. Perfect. We won the trade. Now, let's go back to our big-ass spread. Okay, so here's where price should be. So on close, they could quite literally, we're saying that it is, I'm going to say we got entry. Let me put an entry line on there so y'all can understand this. But here was, we'll just use this one as entry. So let's say our entry line was here, but our spread's still this big. So the bottom of the candle, we're taking that it is like a 10 pip spread. I'll draw an entry line in a sec. Give me a sec. I'm going to put a tiny little line on here for entry. Here, I'll just do it this way. This will be easier to understand. Oh, shit. Control Z. Sorry. Too much coffee, guys. I'm fucking the pooch today. Okay, let me kill this one. Let's insert price as our entry point. I want you to understand this, and this is why I'm taking some time on it, because the brokers can screw you. And I want you to be aware of it. And like I said, a reputable broker honestly won't be doing this too much, but it is something to be aware of. Let's go with Dodger Blue. I already like that color. So this is our entry. Now, when the spread is this big, quite literally on close, the broker can close this out anywhere. Let's get rid of this. We're out anywhere. The broker can close you out here. They can close you out here. Anywhere inside this window, the broker can close you out. Now, there are some shady brokers out there. You know how we have money management? Well, brokers, they have money management too. There are definitely some shady brokers out there. So what happens is, and I know this, you're going to think, well, that's conspiracy theory. It's not. I've seen it happen. They have their own risk management system. So let's say this was a very obvious trade, and we have 100 people get in on this trade, right? And all of a sudden, their risk management system, when it's about 2 to 5 seconds out, will see that we have 100 out of 100 people winning. So what can they do to protect their ass? Well, they can say, you know what? And this has happened, and it's been proven. I think Options XO was the one that we videoed. We did a live video of them doing it. And So what they would do is here's the close price. Now, even with an appropriate bid plus ask in the middle, you still would have won because here was your entry and here was your price. What they will do though, because the spread is this big, they can say, okay, well, it closed there. And then when you call up and bitch and complain, they'll say, well, because of the spread, that's where it was, and sorry, you lost. Now, the threshold for the cutoff, by doing this, they could make, I don't know, 30, 40 people out of the 100 that were going to win lose the trade. That's how risk management's built in with them. It's a little bit complicated, but quite literally, they will do it. So if you're, what's the point of all this? If, and let's do the entry again. So I'm going to move this up to match entry. So there was our entry, and here is our spread. If you're trading on a normal spread, which is 1 to 2 pips most, there's barely any room for them to dick around with price. So it is important if you're trading binary options to watch the spread. I'm going to load up my template next, and we're going to start going through the system. If you're not part of TA, don't worry about it. I'm going to still be covering pointers and things like that. But first, I wanted to get the basics out of the way of what to look for before you even get in for the day. So the first things we need to identify is the market ranging, trending, consolidation. Consolidation means no structure, tiny candles, and we don't want to dick with it. Like over here, these are tiny little dojis. If we see a lot of dojis, we want to stay out. It's just not worth your time trading. And because the brokers can play with spread, basically price, the higher the spread, the more they can play with your price. So you might have the other thing they can do is you might think you're getting a good entry here, but because of the spread, they could move your entry all the way up to, okay, so here, just to explain that too. So here's where you think you got it. They could actually, because of spread, put your entry up here. They can dick around with it a lot. Now, again, like I said, core liquidity markets rolled, I have not seen it happen too much, or very rarely, I don't think, unless news is coming and I missed it. I haven't seen it, but some of those bucket shop brokers will do every damn thing they can to screw you. And that's why you hear a lot of people bitching that binary options is impossible. But they don't understand the back end of it and what to look for before they even start trading, or even they just jump in and say, ooh, fuck it, I got a system, I can win. Okay, so any questions on that point to spread? Spread, trend, consolidation. Any questions? You can ask Slike, you can ask here. Good morning. Put that in live chat in YouTube so you can see it. You can ask here. If not, we're going to move on. Before we move on, before I forget, see down here? Some of y'all remember this one. It showed us trades open and closed. It's stuck in your templates. You can't fucking get rid of it. Sorry, language. Go to object list. If I do, now watch, I'm going to do Control A. I do Control A to highlight everything, and I hit delete. It's still there. So what can I do? List all. Now it's showing up. Again, do Control A, hit delete, close, save your template, it'll be gone. Had a lot of people wondering how to get rid of that damn thing. That's for any stubborn item on the chart that won't disappear. You go to right click, you go to object list. List all, which it's gone, so we won't see it. And it should pop up in the list, and then you click inside this little white box, hit Control A and delete, and it will clear everything. Now, it'll automatically redraw anything that needs to be on there, but if you have shit stuck on your chart, that's an easy way to clear it off. It was a question I had today, so that one's covered. Let me look at my list before we move into the binary side of this. Real quick, let me send another signal for Damien. We'll just AUD USD. Give me a second. I'm trying to get everything covered today. Internet mirrors, sender. And if this doesn't work, we had this problem before. I'll just have to think about it or what it was. It's not that they don't allow it. They do allow it. It was a setting somewhere. But let me get logged in here. See, God, I'm almost saying my password out loud. I'm an idiot. Okay, so we're waiting for first heartbeat to go out. While we're waiting on that, let's go ahead and template up. Template up. By the time I get the 4 templates up, we should be able to send a test trade. Okay, we're connected. Euro USD is one of the pairs I will be, so let's do a trading. Here we go. Buy stop. Okay, so Euro USD, if you're watching this video still, or for you, Damien, I just put one there. And let's go ahead and delete it now. If it didn't work, there is... I know there was something. I just can't remember what the hell it was off the top of my head. 1 minute, 5 minute. Okay, let's close this because I don't want to screw up anything. Oops. God, I'm screwed up today. Alright, so if anything doesn't look right on the charts, the easy way to fix it, just click 1 minute, 5 minute, and that'll do it. Damien, let me know how that went, if there was an error or anything. Alright, so next for binary options. This is the typical setup. Now look, BO, here is the BO. That sounds bad when I say BO. Okay, before we get going on this, I need more coffee, so we're going to take a 3-4 minute break. Damien, nothing. Did you get an error? Let me know. I'm going to run to the bathroom real quick, and then we'll get going on the binary options side. This is going to take a little bit because I'm going to start at the beginning and walk entirely through from... We're also going to talk about candle closes and this thing. Damien, are you going to be up for a bit? If so, what I'll do is log onto your computer today, then, because I want everything done. We're almost to the point. I think I'll be able to go live tomorrow, but I want everyone, not everyone. I'm still struggling to hit the 50% mark on getting people in. I did get a good response. We actually are only at about 30%. We're almost up to the 50% mark. I have a few people with errors, and yours kind of worries me, but I'd prefer just to log on and see it. So if we can do that, let me know. I'm going to take a 3-minute break, and I will be right back. We're going to start up on the binary options side of things. It's not just going to be related to binary options, guys. This pertains to trading in general. I am going to have some specifics to the system, but I'm also going to be talking about how, for instance, right here, we're going to be talking about this little movement upwards and how we knew it would happen. Okay? So I will be back 3 minutes. Take your break, get your questions in if you have any, and I will be right back in a minute. Okay, so I'm back. My bladder says thank you. Let me check Slack. Oh, good. Sorry. Let me get a sip. Okay, so do you want to go jump into binary, or we'll let this first person to answer gets it? Do you want to jump into binary, or do you want to see how I move around charts without a mouse? Otherwise, we'll save that for last. And again, this isn't just going to be binary. It's going to be general rules for trading and mainly. Sorry, I'm drinking water and coffee. So it's up to y'all. We can do how and I'll put the links for the software, and I have the file already set up, so you can just drop it in, and you can jump around your charts. Cool. I saw your PM on Slack, Damien. Cool. Okie dokie. So actually, let's get a few more charts open. See if we can actually pop out some trades. Let's see, GG. Give me a few to get into this, and we'll get it. So file, new chart. What else do we want up here? We got GBP, Euro, USD, USD, CHF. Let's put up US CAD, although I hate it. 5 minutes. Alright, I'll set out another signal in a few. Let me get through this. Alright, so we're all set up. We got 5 pairs running. US CAD. What else could we add in, maybe? Do we have AUD USD on there? No, we don't. Let's toss in AUD USD. 5 minute. Template it. Did I pick template? Yeah, I did. There we go. Okay, so let's talk. The amount of pairs I recommend trading is only about 4, especially if you're a beginner. Maybe 4 pairs, and we're going to narrow it down here in a second. Okay, so the first thing I want to do before I get going for the day is look at the charts. If we look at the charts, what are we looking for? We want to decide, as I mentioned, we did it without anything on the screen, but now we're going to do it with things on the screen. Are we trending? Are we ranging? This one, a little bit of a lack of structure, and what do we see? It's gone flat. So we could watch it, but I wouldn't say close it. I'd give it like maybe a 5 out of 10 on tradability. Now this one, it has a slightly downwards trend, but again, I said we could on these uppers. Okay, so if it's a slightly downwards trend, we're going to be looking to take sells only. No more buys, sells only. There would be a rare occasion where we would take a buy, and that's if we hit a shit ton of confluence. We'll get into that hopefully in a bit. Next, this is USD JPY. Remember what I said about the shit candles? This whole section here, this is shit. No structure, tiny little candles. So if we try to get into a trade when it looks like this, and we can see it, dojis, dojis, dojis. So shit candles. USD JPY, I'd give like a 2 out of 10 then for tradability. So we wouldn't want to dick with USD JPY. USD CHF, slightly upwards trend. We're looking to take only buys. We're looking at buys when it drops down into oversold, hits a confluence, and we know it's going to bounce back up and continue the trend. Because most likely what we're seeing is a pullback into confluence. And give me a sec. And then that means it'll be a safer to get in. If we look down here, it says call stronger, and it says it's range bound, which it's slightly range bound, but calls are stronger. So if we see this slightly upward moving pattern, then we know we want to be looking for buys and not sells, because that'd be going against the trend, and that's dangerous. Let me get one link sent out to somebody. Okay, so back to where we were. Sorry, I had to send a link out to someone. I almost forgot. All right, so USD CHF buys only. Give it I don't know, what would you give this? I'd say maybe for buys only, 6 out of 10, although this is an odd moving candle. But what are we at right now? So this is another important thing. What is happening right now as we're sitting? It is 8:30 my time, 9:30 Eastern time. So what is happening? Anyone? We're in a no trade zone, and maybe someone could guess why. We'll come back to it, see if someone answers that. US CAD. Don't like this pair, but I put it up here just so we could have a couple more pairs. Again, these tiny little candles right here are what we want to stay away from. These candles are looking better. Market is opening. Damien already hit it. The US bell just rang 2 minutes ago. We do not want to trade 10 minutes before, 10 minutes after the US bell rings. What we'll see, and USD CHF was a good example. This is during the US bell. But let me zoom out here real quick. So the market's been pretty much moving upwards. We know USD is a little bit strong right now, but we could see a change of sentiment. What that means is, as the U.S. market kicks into full, let's take a look at Euro. So as the U.S. market kicks in, the U.S. market, since it's full blown live and all the stocks and indices and everything are kicking in, we might see a change of direction, because the U.S. market can say, you know what, that's not where we want to see the market going. Let's push it the other direction. London is slowly coming to a close right now. If you don't know how to check that, again, let's go back to Forex Factory. And eventually you'll just get a feel for these. I mean, you'll know. If we go down to the bottom, right here, so we see Sydney's closed, Tokyo closes right as London opens. Now London's open, but we're heading into the tail end, so the U.S. session is mostly going to be taking over, and if the U.S. session moneymakers decide we don't like the way price is handling, they might slowly start curving it the other direction. So we want to give it 10-15 minutes after the U.S. bell to see what's going to happen. Are they going to say, oh, fuck no, I don't like where that's going, and change the direction? Because you could say, here's a great trade right here, we're still within the bell, and you think it's going to drop on the next one because we have a tiny, we'll just pretend we had a shit ton of confluence, it's overbought, and we think it's going to reverse. But what will happen is they're just going to keep pushing it up. So do not trade during the U.S. Open. That's important. Don't trade during it, okay? So let's go into review mode just for a couple seconds. We don't trade 10 to 15 minutes before news. I'm conservative. 15 minutes before news, I don't trade. 15 minutes after news, I don't trade. So that kills about 30 minutes of trading out of your window. Now, for the U.S. Open, about 10 minutes before, 10 minutes after. We just want to see if there's a change of sentiment. And honestly, this is a gambling candle, because as the U.S. market opens up, sometimes they do push price. What we're looking for is the mass mentality to be out there. The more people are in the market, the less odd movement we will see. Again, that rolls back to bank holidays. Bank holidays, the money makers aren't there, so we do get some more random ass moves. Okay, so let's go. We were on US CAD. I personally think this one looks like garbage. We are hitting a nice support zone down here, but it looks garbagey to me. AUD USD, this one's just kind of coasting along, not doing anything. When we see shit like this, it's a warning for me. What do we notice across the board? The US bell just opened, and we saw the 5-minute candles. Let's take a look at them. GBP USD was not affected by the US Open. Euro, big candle. USD JPY, big candle on US Open. USD CHF, big candle on Open. Now, what's missing? USD CAD, decent candle on Open. AUD USD, big candle on Open. So what's in common with all the pairs I just said other than GBP USD? They all have USD in them. You notice I'm trading USD pairs because it's the USD market. If you're trading the London, you also have the option of Euro GBP. You can toss that into your mix. I would stick with GBP, like Euro, Euro USD, GBP USD. What else? AUD USD, not so much during London. It does move, but it's up to you. I would try and stick with a pair that's actively involved into the European market. So that will also help you pick your pairs. Alright, so let's go through. GBP USD, not liking it too much, but we'll leave it open. Euro USD, fine. USD JPY. Okay, so one thing about USD JPY is it has a habit of what I would say is going on a waterfall or running. What I mean is it'll break a support and then it just continues to drop. You do not want to get into waterfalls, and we don't want to revenge trade on them. That includes Forex. So let's say you took a buy right here, and I'm going to get into this why it would be a bad trade, but if you took a buy right here and price continues to drop, you don't want to take another buy and another buy and another buy and then increasing your... That's martingale. If you're increasing your trade size to try and make up for a loss, we do not martingale. If you lose a trade, suck it up and move on. Don't trade it. Wait for it to see what happens, and wait for... because it could be a break of the range. We're going to get into that in a minute too. Okay. Let's focus on USD JPY. So the first thing before you take a trade, the first thing you want to do is look left. When we say look left, why are we looking left on this candle? We got an alert to get us here, and let's remove some things. And we'll move. And this goes for Forex and binary options. Okay, so that cleans it up enough where we can see. So this was our candle that we're looking at, this one here. It dropped down, it went overbought, and we're saying, yay, it's going to run up. First thing we do is look left. And what are we looking for? We're looking for support and resistance. If we look to the left, here was one section of support. And then, if we look to the left here, it's consolidation, which is forming a support. Okay, so this candle broke down through it and closed lower. Where's our next section of support? Well, we could say there's a little bit here, and let's zoom out one. But we also have some here. Remember, resist turns into a support, and we have some here. So these are all areas, when I say look to the left, we want to be aware of. The first thing we want to be aware of is this candle closed lower than this support range, which means we could be getting a break downwards. So this, without confluence, would be a risky trade. And this is for Forex or anything else. So let's say I was going to take a call here, because if we look, this market's flat. It's nice, it's ranging. So now all we need to do is be able to identify confluence and take a reversal trade. Do we have confluence on this? Here is the daily 5/0, which means about the daily open. It's just here. This candle, I say no to, because if we look, and let's draw the candle out to the right. I'm going to draw a little blue box here to the right. And we'll zoom in. Well, let's zoom out once so we can see everything that's on the chart. If we look to the right, there are no, and this would be the institutional area. Institutional support and resists are Murray math lines, pivots, fibos. Basically, it's anything that when price hits it, it does not move. That would be considered an institutional. When price hits this, it's not going to move. When price hits this, it's not going to move. Now, if it's a daily high or a daily low, price is going to move it, and we want to stick away from not stay away from them, but they're used, we combine those with institutional and with current market conditions to make a decision on when we want to get in. Now, for this one, like I said, this was what I would call a warning candle or a breakout candle. Why was it a warning? Because it closed lower than the previous swing low. Since it closed lower, what that mainly means, without any confluence, meaning there's nothing here to stop it, it's going to drop again. Does everyone understand why we think this candle would drop again? Was there a wall for this candle to drop and then bounce back off to? Was there anything stopping it from dropping again? It broke through here, which is a sign it broke its previous swing low, and it's dropping. Before I even saw what this candle had done, I had already said this was a pass. Why? Because it broke lower, nothing on the right to stop it. Current market condition on the hourly FIBO did show that it's pretty well extended out, but institutional-wise, we don't have the confluence. Confluence means we're taking current market conditions, institutional market conditions, we're putting them together and making an educated decision on, is it going to bounce? So now if we know it's not going to bounce, we could have actually took a sell here and let it drop a little bit. I'll get in more into that with scalping, but if we're trading binary, we know this is a pass. If we're scalping, this all of a sudden became a viable trade. Here's our next support down here. If we look to the right, what does it have to stop us from going? It has a Murray math line, and that's about it. Now, it might bounce up here, but I would, if I had to guess, let's look out a little bit. we were in an upwards trend. The US bell rang. We could see it definitely dropped. Remember, USD just kicked in, so as USD is first, we're looking for a change in sentiment. So it looks like our change in sentiment was south, but we'll see. We still literally, I got 4 minutes left before I'd actually be trading on this chart. And if I don't like what I'm seeing, then I'll extend that out for 5 to 10 minutes to see if I can get a feel for what's happening after the US Open. But if we look to the left, this candle here broke lower than this support, so that means, again, it might possibly run. We have 1, 2, 3 supports this candle broke into. So let's get rid of this, because we're no longer looking at this one. We should have decided, due to lack of confluence, this was a pass. So our next candle. Now when I see something like this, here's our next candle. I'm going to draw head to toe, looking to the right. Confluence-wise, we have one thing, but if we look to the left, we have what? Support, little support here, this peak here, and here. I always go back to this. If you're having difficulty seeing these, what can we do to make this easier? For you to see what is on the chart. Up at the top, you have a little thing that says candlestick, bar chart, line chart. Click line chart. Now we're going to be talking peaks and valleys, and let's see what we can do to identify our support and resist zones. So that's actually, we could draw an entire one. Here, give me a sec. I can never grab these damn things. Cancel. I'm on one click and I keep double clicking. So now let's draw our support and resist, our looking left. There it is there. Down here, we have it here. Now if we look, here's a peak that's lining up with these valleys. So here's a peak. And we have a little bit of flat here, so flat would be it. And, well, here, but there I missed it. We'll draw it here. Let's zoom out a little bit more. Over here, we got a support. And we have a nice bunch of peaks that are lining up with valleys also. Now let's turn our candles back on, and how does that look? Simple, easy way to draw support and resistance. If you can't see it like this, and I'll admit, when I first started, this was a mess for me. I couldn't see them all the time. Switch to the line chart up above. You could also just do it by hitting Alt 3, Alt 2, Alt 1. So Alt 1 is bars, Alt 2 is candles, Alt 3 is line charts. I'm trying to throw in everything I could think of how I use shortcuts, hints on how to get into trades, what to look for. Okay. So again, we had lack of confluence here. So let's go template this. I killed everything on the chart. So let's load this up one more time. So what are we coming into now? Now we're running into a daily support 1, daily 50127, and if it is a yellow is a big round number, this is a small round number. We've been continuously overbought. If we look to the left, again, we've broken through all our supports. Yeah. Oh my god, I'm just removing this over to my other monitor. If we look at all our supports, we're in the wide open here, but we're starting to hit a possible. Now remember, all this is saying is there are possibly orders sitting here to either close, open new trades, something. If we look to the left, and if you can't visualize it, draw a big freaking line and you can drag it around. We have here that might support it, a little bit here, but we've broken through this whole section. So let's get that off there. And let's zoom in. Now what are we waiting for? Let's just say this was an entry candle. What would we do? What reason would we have to pass on this? What candle size do we have? What do we have here? We have a doji so far. We have, what, 3 minutes and about 350 left on the candle. So we're not too worried about there. Let me turn something on so I don't have to watch time tick by. Okay, this way my timer will be every second. And I don't have to. Now I won't stop. So 3:31. The candle is starting to look a little better, but remember that we're coming off a waterfall. Basically what we're looking for is identifying an exhaustion point. Personally, I would say this is a risky trade. Let's get rid of this so we can see the candle a little bit clearer, and we'll talk about what we have lined up. Okay, so let's look for reasons we might take this trade. One, it's risky because it's the bottom of a waterfall. But we have 1, 2, 3 institutional levels. And we still got 3 minutes left so we can talk about this plenty. So A, we have three institutionals. Let's look at current market conditions. What do we have? It's overbought. That's one. I'm sorry, oversold. It's cleared the hourly. We do not have an ABC pattern that's showing, or a 1, 2, 3 pattern. And we don't have a definitive FIBO, like an ABC pattern. If you don't know what I mean by that, watch my FIBO videos. But we don't really have a FIBO pattern here. So center of gravity has been breached continuously. It's redrawing. So institutional-wise, we're looking good. But current market conditions, it looks risky because it's a short-term trend down. Candle-wise, it's telling us no. Remember, we want to wait till, and generally I'd say 30 seconds. If you're new, I'd wait till the last 5 to 10 seconds of the candle. Honestly, I'd say the last 5 seconds. So we're going to get into candle close. And this is why candle close is important. Yes, you could jump in this and hope it moves upwards. Why do we wait for a candle close? I'm trying to think of a way to explain this. If you watch Game of Thrones, and your favorite characters made it, but it's almost the end of the show, let's think of the end of the show as the candle close. If you don't wait for the end of the show or the end of the candle, a lot of times what happens, you think your favorite character is going to make it through, and that fucker gets slaughtered. They surprise you, they kill him off. George is good for that shit. It's kind of the same thing with the candle. We want to wait for the candle close because we don't have the complete story here yet. All we have is a candle that's moving. So if this is your character running away, you think they got away with a minute left, and the candle's all the way down here, for instance, and then at that last 10, 30 seconds, it shoots straight up, and then we no longer have a viable trade, or it could shoot straight down through all these, and we still don't. We want to wait for the candle close almost, and then get in the trade at about the last 5 seconds. Yes, you're going to pass on trades, but it's a safer way to trade. Without the entire candle there, we don't know what's going on. And if we look at this, potentially this candle here, yeah, see, it only hit 1. Yes, we can see that there's orders here because price reacted when it hit here. As for binary, though, again, I say wait to the last because it could pull back all the way up to here, which means that it has plenty of room to push right back down through. Now, if it closes slightly below here or in this area, then I'd say our chances of it bouncing are better. So we got 20 seconds left. We're in our decision-making process. This, on a scale of 1 to 10, I would give this trade 60% chance that if price closes in this area, that we get a bounce back up. If it closes up above it, what I think it could do is then it has plenty of chance for them to push it back down. So remember how I say when we get it, we want it more like this. We want the candle to be almost to the bottom. A big wick is bad, so we had a big wick on this, so this would be a pass trade. Why? Because we get a big wick pushing up. Now, maybe it bounces up, maybe it doesn't, but we'll see. For me, this was a pass trade. Again, I trade conservatively when I do bins. You kind of have to. With the freaking risk-reward ratio with bins, you got to be. So this would have been a pass. Now, even if this trade works out, oh well. So we passed on that one. Why? The wick was too long. Now, what does that tell us by the wick? It does tell us that price is probably going to move up. If you want to get into price action, candlestick patterns, things like that, it does tell us that possibly it's going to move up because the bulls were basically stronger than the bears. Bulls, it's called bulls because the horns. When a bull attacks, it goes from down to ups, and a bear swipes from top to bottom. So that's why they call it bulls and bears. If you didn't know, I'm trying to go through every little thing today, I guess. So again, this would have been a pass for me, even though, let's go reasons why. Because we were coming off a waterfall. This was a potential exhaustion point. I had the institutional to show it, but I didn't have the current market conditions. Current market conditions had been wiped out. So for me, this was a risky trade. Even though it might pop up, risky trade. Any questions on that one? And we're going to move along to another chart. at least we got one thing to look at there. That was good. Oh God, I forgot I turned the coffee pot off. My coffee's freaking cold. So if there's no questions, we are gonna move along. We're gonna get into basics again real quick. Again, look, this is almost the exact same setup, exhaustion point, but this for me would have been more of an entry. Why? Because institutional-wise, it was weak, but I would give this one a little more 7 out of 10. Why? Because the candle was there. But look what it's doing, and I bet if we come back here, they're both doing the same thing. So this one, it looks like they're all running down. Yeah, everything's running down. Okay, so let's get back to USD/JPY. This one would have been a pass. Now, if we look at a potential exhaustion zone and it's getting blown through, personally, sit out and wait. Just see what the chart's going to do. Remember, we just had the US Open, and maybe they're pushing price in a direction. Because of the wick on this one, we said pass. It might turn out, it might not. We can see by what's going on just by sitting here watching the charts. I guess that's a good point to talk about this. When you're trading, I would say limit your screen time to about 2 hours per day. No YouTube, nothing else. You need to be watching the charts, because what we're seeing here by watching this candle is we can see here it looked like the bulls or buys were taking control of this, but by watching this candle we can see that there is actually a little bit of a fight going on here between buys and sells, because this candle moved up nicely and then it got pushed right back down. Now as we watch this candle, we can see there's a little bit of fight going on here. When people say price action always doesn't have to be looking at the chart. Cool, Cheryl. It's recorded, so just go to the YouTube channel and it will be there. And if you have questions after watching the video, just send them to me. But we can see there's a fight going on here. So that way, we passed on this and now we're watching it and saying, well, I might want to get in. No, we don't. We can see that there is a fight going on between bulls and bears here, buys and sells. And it looks like right now, at first it looked like the buys were going to win this. But we can see the sells definitely have a presence there. So when people say price action, it's not as complicated as it seems all the time. It's simply watching the chart and seeing what happens. So we expected a reversal here, but we can see by watching there's a fight going on this candle. And it looks like slowly that the bulls are losing and the bears are winning. So sells are winning and buys are slowly losing out on that. So we know there wasn't a lot of orders here for buys, and the sells are still going to be pushing it down. Our next area that we would want to watch would be down here. Now, does it get there? No. This might be the bulls might fight back a bit, and sells might try and push it down, and then they just say, fuck it, all the orders are exhausted, and then the next candle buys take over. But we don't know what's going on here, and it's not responding as expected to this area, so what do? We stay out of the trade. Now, again, if you were scalping at about this point of this candle close, then we could have gotten to a scalp here. This was our candle close. Let's take a look. If we would have got into a scalp, that's a 33.6 pip move. So that was a decent scalp. So again, I know some of you are just you're starting off in your career, but it is a good idea to keep an options open on both sides of things. So this trade was more of a potential scalp than it was. Now here, I would have been exiting out. If I was not using a take profit and stop loss for scalping, this would have been about the point where I wanted to get out. Why? Because we had confluence down here and price is doing something as soon as it hit these, so we'd jump out. So you can see how you can while you're learning binary options, you can also learn scalping. It's simple. Well, it's not simple, it's just watching the screens. And again, back to what I was saying there. I would limit yourself to about 2 hours a day. If you can't stare at the charts for 2 hours, then do an hour a day. Once you lose focus, there's no point sitting in front of the PC anymore, in front of your charts anymore, because you're not learning anymore and you're just wasting your own damn time. So if you can only look at the charts for an hour and actually focus on what's going on, great. Do it for an hour, take a break, and come back when you can focus again. Now, if you're learning, so this is one of the things that I definitely say. If you're learning and you're on the 5-minute chart, and for instance, markets are slow, what can we do to speed up your learning process because you can only focus for an hour, hour and a half? Drop to the 1-minute time frame. You'll get more setups. This is a trend, so you'd be looking at scalping. Here, there we go. Let's take a look. USDCHF. So everything is slowly turning now. GBP is just piddling along. Okay, so GBP is going to be a good example. This is still no tradable. See how it's just kind of flat and funky? We got nothing there to trade. This is a good example of when not to trade a pair. This one looks like dog shit. Now, what can we see on this one that across the board we're seeing? So, template, and let's go blank. Get rid of that. What do we see that happened here? Let's go to line chart. There was the resist. We'll draw on a little support. I also say mark your charts. Do these little blue boxes. Get in the habit of it. It will give you something to do while you're looking at your charts because you'll be engaged with your charts. Draw your support and resist on there so that you're aware of it, because sometimes you'll be excited. If you get a shit ton of confluence, some people get excited, they jump in, and they're like, fuck, I forgot to look left, and the trade fails. And that's like for a scalp. Okay, so we drew those there. Let's go back to, remember, we can do Alt 1, Alt 2 is candles, Alt 3 is line. So Alt 2 it, and let's zoom in and see what happened here. Here was our little range, candle closed above it. We could potentially then look for what? A buy upwards. If there was no confluence to the right, this could have been a potential buy. But this is GBP, and like I said, it looks like doggy shit to me when we're looking at binary. I'm not trading it on Forex either. So here's what we look at. Candle moved up, it closed above. Immediately, we want to do what? Look to the left. So we think it's going to run up. If we look to the left, we say, oh shit, there's another support there. It doesn't really have a lot of room to run to the left. But if it closes higher than this, and let's take a look at what happened. So there it is. If it closes higher than this, then we have a potential for a run up. Those are the simple little things you should be seeing whenever you look at the charts. If you don't see them, mark your charts, and they'll start to pop out to you without even doing anything. Alright, so basically we got a bunch of runners. Let's take a look here. It's after the fact. I hate doing it after the fact. I'd rather talk about this live. This was a run up, and we did catch an exhaustion point finally. But we had... And let's draw the entire candle here on this one. So here's the top of it. Here's the bottom of it. Okay, so there's the top of the candle, the bottom of the candle. That blue box envelops everything. 1, 2, 3, 4... institutionals. We have a current market swing of 261.8, which indicates exhaustion, so we would be looking for an exhaustion. Now, why is this important? Because this one is here. This column here, where these little numbers are with this blue line, these are FIBOs, and they're current market conditions. They give us a better idea that the current market conditions say exhaustion, where on USDJPY, we did not see it's missing. Current market conditions could not tell us about exhaustion, whereas this one could tell us a little bit about current market conditions with exhaustion. So you see why it's important to combine current with institutional, no matter how you're trading. If you're scalping, do the same thing. We want to combine current with institutional. You don't have to have all this crap on your chart. When I scalp, my charts are not almost empty, but my charts are very bare compared to this. But for binary options, I'm really looking for a wall for it to run into and bounce off of. And if we can create that wall and then watch and see how price reacts to it, that's how we get our high probability trades. Now, people ask, well, why don't I do trend trading on binary? I don't, because we always get that little one candle that goes the wrong way. A trend for me is more of a longer term thing. Like if I want to say here, this candle here broke this support and I think it's going to run up, I want to be able to give it 30 minutes to run up. I don't want to say the next candle is going to go up also, because there's always a chance that after it breaks the support zone that it pulls back, especially if there's confluence. We had a daily 50100, not a lot of confluence there. We did have a 161.8, still not. Institutional didn't support it. On this one, institutional and current market conditions did support a decision on this. So this candle here hit, again, it hit a big round number. It hit daily 50127, resist 1, and a Murray math line. So it hit 4 institutionals. Now, remember, the numbers here, the lower the number, the stronger. White lines are very strong. Those are your actual pivots. Now if we move up, this is a monthly resist. This is a monthly resist once. Here's a daily one. So this is our first strongest after the actual daily pivot. This is our strongest next. Now if we come up here to DR2, this one is not as strong as this one. The higher the number, the weaker it gets. But if we can have a daily 50161, that is as strong as hell. That on the daily 50 chart means that if it hits that, there's probably orders sitting out there. Okay, but back to this one. So this one, again, it's gone now. But because we had this to back up the decision, where on USD JPY we were missing it, so I said this would have been a pass. On Euro, this would have probably came into more of a possibility because I had more current market conditions to back it up. Even though it was still a waterfall, I could identify exhaustion by current market conditions. And since this is a short-term run, we want to be able to identify current exhaustion conditions. Whereas, again, with this one, we had no way of knowing current market conditions. It sputtered out here around there, but we would have taken a loss here, and then we would have had to pass, and maybe it came in. But again, look what happened. Bulls or buys look like they were taking over because we had a big wick push price up, and then we get an indecision candle, and then it decides to go up. We were oversold this entire time to there. Divergence on value charts. This is a good time to talk about it too. It also can help with a little bit of talking about exhaustion on these waterfalls. It also can help you if you have value charts on your scalping, it can help you there too. Okay, so divergence on value charts, what does that mean? Price was dropping here. Let's get in nice and close on this. Let's make value charts bigger. So what does divergence on value charts tell us? So here it dropped, it went overbought, oversold. Price moved up, value charts moved up. Now this candle, price moved down, and here's value charts. Price moved down. The next candle, price dropped, value charts dropped. Now it gets interesting. Here's our next candle. Price dropped, what did value charts do? Value charts actually moved up a little bit. So we're seeing a little bit of divergence on value charts. That does not mean buy. All it means is that yes, we are probably approaching an exhaustion point. How do we know that? We don't. It's just kind of like a subtle clue that we might be approaching a exhaustion point. The next one was the doji where the bulls took over. It did drop a little, but for the most part we never see it. Look, here is lower, lower. These aren't going lower than here. Yes, it was a little bit lower, but still, it should, if you're thinking reasonably, price is going down, but the overbought, oversold is here. Now remember, value charts is everyone considers it an overbought, oversold. What it actually is a cyclic indicator. So that's why I say you use value charts as an alert, but what it's actually telling you is here was an up cycle, here's the down portion of it, and now we're moving into an up cycle again. It's trying to tell you the cycles on the chart of here's the buy cycle, now it's moving into the sell cycle, and this is saying that the sell cycle should be ending at some point and we should move into a buy cycle again. Remember, the market moves in waves. It does not move up or down. Whether it's trending or flat, it moves in waves. Oh shit. PA. This was going to be a long video, I knew it. We're already at an hour, 10 minutes, so I will try and wrap it up, and then I'll wait for questions from this video, and we'll go over them again tomorrow. But remember, the market moves in waves. And what I mean by that is exactly what I'm saying. Oh god, I can't do this very well. But if it's on a range, the market's going to move up and then down. Now, if it's on a trend, and I'll try and identify this. So here's our trend moving upward. This is the general trend moving upwards. I'm going to do this with a pencil. But even with the trend moving up, we have our dump, then a pullback. Then price moves up, and a pullback, and up. Now, why is it moving in waves? This little line here would be called the median. Whether it's in a trend, we still have price always tends to drop back to the median, or what they call rubber band theory. Basically, the rubber band gets stretched up, and it returns back to here. And then it relaxes. Then it might drop down, but it always is going to return back to median. Whether we're on a trend up, a trend down, or we're flat, price is going to move in waves, and it's always going to return to the median. So, and inside of these waves, and I'm not going to get too complicated, and I'll leave this as just a thought. So let's do green, and let's make this a little thicker. So here's our first wave. I'm going to make this a big elongated one. So here's our first wave, and we're on a ranging market. We're going to call this the... Ooh, Lord, this is pretty. I know it. This is your 1 hour time frame. So there's our 1 hour time frame wave, right? Now let's switch to red. What happens inside that 1 hour? The 5-minute charts are doing this. So remember, we have waves inside of waves. That's why when we look at the chart, why we don't go against the trend. So we're on an upward trend. And remember I said when we looked at this at the beginning. So red is going to be our 5-minute. So upwards wave 1 hour, so the predominant trend is moving upwards. Now on the 5-minute chart, we see that it is a trend upwards. So remember what I said, if we're on a light to medium trend, what are we looking to do? We would be looking to only do buys on this upwards trend. So you'd be looking to get on let's find a different color. You'd be looking to get in on this wave, this wave, this wave, and this wave. But where would you be looking to get in? You'd be looking to get in on those waves at the bottom of each one so you could ride it all the way up, all the way up, and all the way up. Does that make sense to everyone? This is the same principle with scalping, with bins, with anything. Do not. Some people trade against the trend. Trade against the trend. I'm not even going to try and say it. Going with the trend just makes things easier. Now, all you have to worry about is knowing when this 1 hour trend ends and starts moving down. And then what are we going to be looking for? Again, we're going to have waves going up, down, up, down, up, down. Oh, that's a shitty looking one. So up and down. Now we could scalp downwards, or we could take bin buys and sells. Bin sells, I'm sorry. But we'd be looking to sell on the downside of each one of these waves. Now, when the 1 hour goes flat, that's when it really becomes easy, because then if we can identify that the overall trend is flat, what can we do with our little waves? So with our little waves, when we're in a range, and that's why I say for bins, range is the best. Because one, our overall is flat. So what can we do? Well, we could trade here. We can trade here. We can trade here. Sells. On the upside, we can do a buy here. Buy here. God, this is ugly, but hopefully I'll get the point. And buy here. That's why I say a ranging market is wonderful for bins. Now, if you can learn to identify the trend, you can when the predominant trend is going up, you can do buys. When the predominant trend, you can do sells. Or you can scalp. It's best to keep an open eye on both, especially if you're in this for the long term. I would say learn scalping, do your demo trades. You can do demo scalps. I mean, shit, it's super easy. All you have to do is come over here. Let's pop through a couple charts real quick. Okay, so here's our pullback. And all you have to do is open this up. You can set it, and you hit buy. Simple as that. I'm in a trade. Ooh, it's not spending any real money because this is a demo account that I'm showing y'all. But I'm in a trade. So I saw that price moved up. This looked like a pullback to me. I'm going to get in. And there was a little bit of confluence here. Whatever your reason was. It's that easy. Now, if you look in the pack, with the news course, if you go into the news course pack, you have a little script. I have mine hotkeyed to Alt-O, and if I hit OK, it's showing me that there was a trade here. See how it's upwards? You don't even have to freaking keep a journal. All you have to, well, I mean, keep a journal. Go through my videos. I even showed you how to link your accounts to FX Blue so it can keep a journal for you of your scalping. Forex trading is easy because it's a little bit more on the automated side. You need to keep your journal for binary options, but on the Forex side of thing, keeping a journal and reviewing it is more of an automated process. You can slap the script on here that shows you the trade, and you can just go to FX Blue and look at your stats and see what you did for the day, and it shows you how you're performing. Okay, so this is going to wrap it up for today. We're at 1 hour and 17 minutes. I want to make this viewable for people to get through. Did I miss any questions? I will show them. For guys in the Signal group, I'm going to set up here in a second. I'll take a break and go live again, but I need about a 10-15 minute break, then we'll run through the signals to make sure that they're working for everyone. I'm literally, again, let me say this since we have people watching. I went a little bit rude with it, but I did get a response of getting people to start back in, and I'm getting responses on issues so we can get everyone fixed and up and running. Hopefully by the end of the day today we have enough and we'll launch tomorrow. Again, like I said, I am not going to delay that long and tough shit for everyone else. I gave people 48 hours. That means tomorrow at some point, that ends the 48 hours. I would like to get enough people going so that we can get it going today and go live tomorrow, but I'm not going to push it. I gave y'all 48 hours. I know there's a problem because some of you are on Australia, so you saw that email this morning, and you get with me, and by the time I get back with you, we've already had a whole day pass. If you have questions over this session, please hit me up. I will review them tomorrow. For signals, I'm going to take a 15-minute break, go live again. I'll post a message in the signals group room so that you can get in. We'll make sure everyone's up and running. Again, questions, please ask, or I don't see the point in doing these. I know some of you, this is new to you. I don't mind answering questions. That's the whole point I'm doing this. I mean, it keeps me from falling asleep while I'm trading, plus I enjoy teaching. I honestly, and this is something weird, I think when I move back to Pennsylvania, I might go back and get my teaching certification so I can teach part-time where my daughter's going to be, so I can trade. I'm freaking 40-something. I don't even know how old I am. I'm actually liking the idea of teaching. As long as I can trade, I'm good. But I think I might do it part-time because I've found that I know this is totally off the subject, but it's something that's been rambling around, so I might as well talk about it. I enjoy teaching y'all. When I was in the IT field, the way I did IT was heavily geared around teaching. So I mean, I enjoy doing this, but it helps me more if you ask questions. My point is I don't mind the questions. I enjoy doing this. I enjoy teaching people, but the questions help. At least y'all will learn. Okie dokie. So again, if there are no questions, that'll wind it up. I hope you enjoyed my beautiful drawings. I don't know any better way to do those. And I will do a follow-up to this. This covered most of what I wanted to, but there's still some other things out there. I want to go a little more in depth on the confluence zones with institutional and current market conditions, and we'll add a little bit more of the scalping side into it tomorrow. But if we have questions, get them ready, and I'll go over them tomorrow. Like I said, don't ask. You're not going to get a response, and you'll never know. Alright guys, so hopefully this was a good one. It was a little bit long, but I had a lot of cover. Trend for bins, 1 hour. I'm not sure what you mean by that, George. Basically, when I mean trend for bins 1 hour, you're looking at here. It doesn't have to be the 1 hour. All I'm seeing here is like the general trend here is downwards. The cog even tells you it, but now the general trend is moving upwards. We're not flat here. So this entire thing, once we identified we're in a downwards trend, we would want to take sells, just like with scalping. Now here, we can already see that it's moving up. We'd be looking to take buys, but we would want, since these are sells, right here I can identify we would have gotten an alert here, and I would take a sell because it is a downwards market, but it went overbought. So if it's a downwards market and it goes overbought, they're going to smash price back down. Now, if I'm looking to do turnarounds on these and it's selling, they could keep pushing it through. So we're going with the trend. Here's a downwards trend. It's not a heavy trend, just a downwards trend. We're looking to take sells only. It's kind of like the ocean. If the tide's coming, here the tide's coming, going out. So we want to take trades going out with the tide. Now the tide's coming in. We want to take trades going with the tide coming in. Think of it that way. We're moving with the tide. We're moving with the trend. Because overall, if you're trying to swim out when the tide's coming in, it's more difficult. If you're trying to swim in when the tide's going out, it's more difficult. That's basically what the trend is. Think of it as the tide. We want to move with the tide. When it's going out, we want to go out. When it's coming in, we want to come in. When price is overall going down, we want to sell. When price is going up, we want to buy. Hopefully that clears everything up. And this, basically, when you're looking at the chart, the overall movement, you could consider it the tide, the trend, whatever you want to say, and it helps us determine the way we're going to take our trades. I'll get into a little bit more tomorrow. Like this one here was a possibility because it had a shit ton of confluence on it. All right. If there's questions, please let me know. This will be on YouTube. I'll post it up, but I'll put the link in the room for it, and then ask me any questions that were covered from this. Again, guys, I enjoy doing the educational stuff. This came about because this was a request. Someone requested for me to do this. I didn't bitch fest, didn't do anything. George, for your trades, I will look at them. I actually didn't know this was going to run an hour and a half almost. I'll look at your trades for the news course, and I'll get back to you. But I need 10-15 minute break. When I start up signals, as I'm sending out the signals, I'll be looking at your trades and I'll go over them then. So if you're around in 10-15 minutes, I'll go over your stuff live so you can see it, okay? Other than that, that sums it up, guys. Thank you for coming to this one. And if you have questions, again, you can Skype me, Slack me, or email me, and I'll respond. Skype I only check about once a day, though, so don't get too excited if you Skype me and I don't answer back to the next day. There's also a Facebook page. You can Facebook me if you have Facebook. Trading Access is on Facebook. I don't use it a lot. I put occasional updates on there, but it is another way to get in touch. All right, cool, George. Then I'll be back in about 10-15 minutes. Let me get a break, make some more coffee, and we'll get going. I think 3 cups will be enough for today. Thank you all, and have a good one.